This is Market Day Report. Let's roll through the markets. We've got some news to add to it as well. We're starting with the canola market, and we're higher here. Why would we start with canola other than the fact that's a picture of canola in the background, right? Well, in part because this is the only row crop in positive territory year over year. Yeah, gains of over 3% year over year. We're higher across the board. This one actually has been hot over the past month. One of the hottest commodities, up 11% month over month. It's the canola market. Well, while we're here, let's just segue over to, how about soybeans? Soybeans with gains today, starting to move back into positive territory. We're right on the brink, talking about year over year. March up 7 1/4, 1067 1/2. Want to touch on soy meal contracts, which are lower, in part because bean oil is taking off. 54s across the board, with the exception of the July, which is trading at 55. One more here. How about the corn market? Corn moving higher as well. New crop 457. It's up 2 1/4. Chris Swift is with Swift Trading in studio with us. And Chris, just before we came in, we were talking about 45Z, a new, it's unpublished at this point by EPA, but we've got, or from the government, but this 45Z could be a game changer on the biofuel side. Why would that be important?
Oh, because we've been in the doldrums for our grain markets, and I've heard many of our analysts discuss over and over again how important it is for us to be able to literally chew our way out of this ourselves. Relying on exports, relying on others to be able to consume a lot of this is great, but that reliance is wearing thin right now. So I think it absolutely pertinent that we do something out there to be able to consume domestically some of this product that we're growing, and nothing could be any better than our biodiesel fuel, the ethanols. And we've discussed the ethanol. You and I were in a conference a couple of weeks ago about how long it might take to get that E15 up and rolling. But if we could get the mandates to it, if we could get Congress to do something about it, and of course it's all in heavy competition with fossil fuels. So you got two heads butting together, and one side going, no, I don't want your product, and the other side going, no, I don't want your product. But we have to find some kind of happy medium there.
Yeah, absolutely. In part, we're in this situation because we have a record corn crop. Let's just start there. Record corn crop, and you start looking at places to sell that. Well, we can sell it as a feed grain, but we have fewer mouths to feed, don't we?
Well, a little bit, and really what it is, it's the livestock. There's just less cattle out there, and even though we know that the southern cattle are all still there, and we've been shipping corn down there, there's just so many. So we have, up until ethanol even really came into existence, 80% of all the corn crop is used for livestock feed. Now it's 40% of the corn is used for ethanol production alone, which a lot of that 40% is brought back into the livestock market with DDGs or wet DDGs, either one. So.
Yeah, absolutely. Okay, speaking of livestock, we jumped off into that. So we'll take a break, come back, and we'll tee it up. We talk cattle next. This is Market Day Report. All right, let's look at livestock. We'll start with the hog market now, and lean hogs, mixed territory, front month up 22. April, a little more active at 96.35. We're in a tight range here, trading within about an 80-cent trade range. 96.37, it's down 25. We're holding the triple digits for May, June, and July. Feeders, are they the leaders today? Well, we're in mixed territory, front 2 months in the red. April, 363.90, down 27 higher on the May contract. And then we go to live cattle. We saw a move higher yesterday as live cattle trying to pull in that gap between where they were trading and the cash last week, which traded up to, what, 241 or so? Well, 237.52 in trade this morning on February live cattle. Fats are down 65. Got Chris Swift with us. Chris is with Swift Trading. By the way, you've been at CattleCon.
I have. I'm already ready this morning. So.
By the way, I'm glad you, just in case I forgot, it is Christopher Swift.
Yes, absolutely.
Okay, so let's talk about the cattle for a moment. We're in a brand new world.
We are.
Right now with the closure of the Lexington plant by Tyson. Again, you can pull a shift off someplace and you can bring that back. But the fact is, packers need fewer cattle to keep going, right?
That is true. And we're in a really big mixture now. Before, in 2025, we had some extenuating circumstances as we was really able to push cattle prices higher, beef prices higher. Nobody knew where that top was, and we were finding that out, and we did in October. We found out around $430, $435 for boxes and around $242, $252 on the fat cattle. Now we've changed dramatically. We've had an enormous move down in prices, an enormous move right back up again in prices, but not everything has followed this time. Boxes didn't follow. We kept retail beef prices higher to the consumer. We've tried to open up margins to the grocers and to the restaurants. That hasn't really worked very well. We continually see that restaurants, and it is not necessarily because of the beef, it's all of the core inflation that they're having to deal with. And this winter storm probably didn't do a whole lot to the cattle. It did more to the people. So we consider a lot of people's freezers are gone now, and no telling how much of that freezer beef is actually gone. We may have to replace that, but I wouldn't be real quick to say that they're going to jump out and buy another half side of beef and fill it. So it could be slow in that, but that should give good demand because that beef is gone and was not consumed.
Okay, so one of the other thoughts I had here, and again, trying to keep weight on cattle in a winter storm, that's part of the challenge there. But if we're having to hold some of these longer, are there some discounts coming for the heavier weight cattle?
I don't know. It's been discussed a lot, and I really don't know whether the packer will do that or not. What we're finding out is that the enormous amount of losses that the packer is having to incur right now would lead you to believe they're going to take some kind of further action, whether that's cutting slaughter back again, building those weights up. I'm just not real sure because the last thing they want to do is flood the beef market right now with it already a depressed price. So I'm a little perplexed. I don't know what they're going to do. So grind through it. I mean, if you think about it, that's really all they really can do is just kind of grind through it.
Well, and I guess one good thing I can think of today, we don't have to talk about the emu or ostrich market, right?
That's right.
We were talking about that earlier, and I want to say it was back in the 90s, 80s, 90s that was rolling in. That would be the next big thing, and
it just kind of went away with this fake beef, whatever.
No. What was the eggs? Was it the ostrich eggs? Is that what?
Yeah, emu eggs. They're big blue eggs, Fred Flintstone. Yeah, so everyone thought it was big Fred Flintstone. So.
Liza, you have no idea what we're talking about.
I don't exactly, but I was going to ask because we were also discussing alpacas during the commercial break.
Right.
I mean, wool, I don't know if you had any alpaca market, if we know anything about that, quite frankly. I just know that they're not the nicest animals.
Yeah.
Are they the ones that spit at you?
I believe.
Okay.
I think they're in that group. Thank you, Mark and Chris, so much for joining us here today.